This is IA Forward, your playbook for success as an independent insurance agent. Here to help you knock it out of the ballpark are your hosts, Shane Tatum and Tonya Lead.
Welcome to IA Forward, and welcome back from your birthday vacation.
It was a birthday vacation because we didn't get cake.
I made the assumption it was your birthday vacation, but if there was no cake, then maybe you get another birthday vacation after this one.
It is my birthday month, but I call it the empty nest, long weekend, why not getaway? We just haven't quite gotten to the regularity of the spontaneous, let's just go. Our life has been planned with kids playing sports and kids doing activities and all these things, which we love. But we're just now getting into that empty nest, spontaneous, let's go kind of mode. Why not? Plus, the cabins that we always go to are offering an extra free night if you booked for at least 2 nights.
We did the same thing this weekend, but not in the cabins. I think the antithesis of the cabins. Friday night, some friends of ours threw me a surprise birthday party, which my husband, who loves me and knows me, told me about the day before. So I did not have to have the surprise because I hate surprises and would much rather be prepared for a surprise party. So had that Friday night, which was amazing. And then Saturday morning woke up and it was very much that, why not? Let's go to New Orleans. So we drove to New Orleans Saturday morning, stayed at the Roosevelt, which is our happy place, and then came home Sunday evening.
I'm not a big birthday celebrator. Is that a shocker?
Total shocker right there.
Okay. I'm fine celebrating other people's birthday, but I've never just celebrated my own birthday. Is that normal?
I love to celebrate other people's birthdays, mine not so much. I appreciate the fact that a group of people threw me a surprise party Friday night. It was absolutely wonderful. It was delightful. Everybody even researched healthy, no sugar, high protein foods that our area had, like all of these fantastic things that I could actually eat. And then they had the regular party food for everybody else. But that was really touching to me that people cared enough about the lifestyle that we've chosen to do that. And that meant a lot to me. That probably meant way more to me than the fact that we were celebrating our birthday. But beyond that, I enjoy gifts. I'm not going to say that was bad. I enjoyed my trip, but I would never just throw myself a party and celebrate the way I would celebrate other people.
Gifts is not one of my top love languages. And unfortunately for my wife, gifts are at the top of her love language list. We've been here before. We've talked about this, how in a marriage, you just have to get better over time. I'm getting better. And I challenge the men out there to constantly get better because there's a really good chance that your love language does not match your wife's love language. I'm just saying, straight up. It just is the reality of it.
Ladies, I have to encourage you to do that too, because we have a tendency to do the same thing and only fulfill our love language and not pay attention to theirs. So that goes both ways.
Almond flour cake. Did somebody find something like I need to know really bad?
Yes, they found a 0 sugar, gluten-free zucchini muffin that they went in and did some fancy stuff on top. So yes, I will send that to you so you will have it.
Thank you very much. That will be wonderful. I don't know that I will be able to make it, but I bet my wife would love to make it.
Oh, that came out of the freezer section.
Oh.
Yeah.
I probably can't mess that up.
So our transition into our topic today, this one's going to be a stretch, but let's talk about the gift that Yahoo Finance gave us this morning in the face of an article that read, car insurance rates could jump 50% in 3 states this year. Here's where they are.
Happy birthday, California, Minnesota, and Missouri. You are the grand prize winners of the largest rate increases for auto insurance, according to Insurify. 54% for California, 61% for Minnesota, and 55% for Missouri. Now, I have comments on California and Minnesota. Missouri is the wild card for me. I'm not up on what's going on in the state of Missouri, unfortunately. California, Minnesota, there's some things there that we can dive into.
My first question was going to be, okay, what happened in Missouri? Okay, you don't have the answer to that one.
One of these is not like the other. We've got California, with its history of depressing insurance rates, the battle ongoing with the agency side and the insurance side and the regulatory side of the insurance commissioner, just really locked up. And really, as of the last few weeks, just hearing some things come out that governor pushing for the insurance commissioner to resolve this problem because they've got a property crisis there. We have a property crisis all over the country, but they've really got a property crisis there due to the wildfire exposure and so many other things, development, overdevelopment, etc. But auto insurance, that was supposed to be the saving grace. All the property insurers out there are just clamoring for more auto insurance. So this is not shocking because nothing is shocking after 2 years of this hard market, but it's a little shocking.
In the paragraph after that big announcement, it talked about how the typical U.S. insurance policy will jump 22% this year, which comes over the 24% increase of last year, which is not shocking to any of our agents that are listening to this podcast. But those are some pretty big numbers when it comes to consumers seeing them in black and white.
It's an election year, and insurance is always an easy punching bag. Everything's up. And the reality of it is that your groceries are up maybe more than your insurance are up in terms of percentage increases. There's so many things that have gone up from an inflationary standpoint. Insurance is just an easy punching bag. And unfortunately for us in the agency system, we've been fighting this. We've been dealing with this challenge for a while now. And for this to be really written, if it was even really written, if it wasn't just an AI grab across some different headlines. This is an article that is very traditional punching bag with the insurance industry. But the reality of it is that we are seeing these increases. We have seen inflationary issues with car insurance, with repair cost. The severity claims have jumped through the roof over the last 3 years post-COVID. We forgot how to drive, the rate of speed at which we are driving, the number of cars on the road. There are a lot of contributors to this issue. I love Brian Besh, one of our partner agents in Austin. Brian had a great analogy about McDonald's and the McDonald's French fry. If McDonald's was losing money on selling French fries, then they would either go up on the price of selling French fries or they would stop selling French fries. And this is the analogy that I thought was very brilliant to talk to his customers. This is how he was actually helping his team talk to policyholders, was basically giving them this very simple stripped down issue of some companies have stopped selling their capacity. They have no capacity, reinsurance issues. They've pulled back. They can't continue to add new policies until they right the ship. And then other companies are just solving this problem by, when you have a shrinkage of capacity, then the others that are raising the price have to raise the price that much more because they're writing that much more. And so this process feeds itself, and you end up in this place where you see these what feels like really crazy percentage jumps. But the reality of it is if we put this in the comparison of McDonald's French fry, would McDonald's sell these French fries at a loss? Some people could argue that a fast food restaurant would do that. As a loss leader, I recognize that's possible. But if you did that across 20-something thousand McDonald's restaurants in the world, money's got to come from somewhere. McDonald's Corporation may choose to run a campaign to sell French fries at a loss, but the reality of it is they're not going to do that forever.
I'm going to take your McDonald's French fry analogy and raise that with the McDonald's spilling coffee in your lap lawsuit. McDonald's, as it gets sued for stupid things like people spilling coffee in their lap and juries paying out $6 million because somebody spilled coffee in their lap. McDonald's has to pass that cost along to its consumers as well. Looking at that from an insurance company perspective, there is a reason that more and more attorney billboards are popping up for accident claims. So don't think that because an insurance company had to pay out $250,000 in a claim for Bubba on a billboard on the side of the road, that's not causing your insurance to go up.
It's absolutely causing your insurance to go up. And litigation over the last 3 months at some conferences that I've been at, litigation has now become the number one concern. This idea that private investment, private equity, large investment organizations have entered the lawsuit space through funding attorneys. And there is a big push to tort reform, different things across various states to get this under control. Because here's the deal. When private equity enters anything, we've seen it in the insurance space. We saw it in 2021. We saw valuations go through the roof. That wasn't necessarily because insurance agencies were making more money. It was because there was a competitive bid up of valuation over the entry of huge sums of investment into the insurance brokerage, agency and brokerage space. We now see that as housing, single family housing, with large investment groups buying blocks of single family housing, renting it back to us as consumers at higher prices, and causing the crazy increase in inflationary housing market cycle. It's not because you and I are willing to pay more. It's because huge amounts of money have come in to do this. I'm a small government guy, but this is an issue. This is an issue that probably needs to be legislated. It needs to be dealt with because that's been one of the biggest drivers of the housing market. Now we see private equity, private investment coming in to litigate the huge increases around severity in claims, auto claims. That jump is not just because. It's because there's huge amounts of litigation going on to ramp up that price, to ramp up that litigation. That's why the advertising's crazy. That's why the billboards have gone through the roof. There are great lawyers in this country, and we need that industry. We have huge amounts of money flowing in that it removes the risk of pursuit. So there's less and less of the attorneys having to fund their litigation. When that litigation is privately funded through investment for a return, now we've got a big new problem. And so that is something that is going on that's driving a lot of this cost up on the inflationary side. This article doesn't talk about that. It just paints the big bad insurance company the driver of greed. And that's not the reality of the way insurance works. Auto insurance targets a 4-cent profit, 4 cents on the dollar. That's all they're looking for, an underwriting profit with a combined ratio of 96%. That seems pretty fair to me, but that's not the way the article paints this situation.
Does that 4-cent profit include investments?
No, that is an underwriting profit that typically is targeted by most insurance companies, is an underwriting profit of 4 cents. That does not include your investment income. And without the investment income, the industry's bleeding. And with the investment income, the industry has been bleeding for several years now. But really, the underwriting profit, we're just seeing a handful of carriers over the last few quarters come back with some underwriting profit success. That's brand new. And as soon as they make money, boom, the media hits them as greedy as soon as they make money, because all of a sudden, for the first time in 6 years, a company makes an underwriting profit and they're greedy. I think that's part of the issue, is just being able to dissect some of this information and get down to what we should be talking to our customers about.
The second half of this article talks about that 42% of people skipped an insurance claim because they didn't want their rates to jump.
I actually think this is a good thing. My opinion on this is that much like the medical insurance, health insurance area, we went through the process of just file the claim, almost like a maintenance policy. And we need to have some self-insurance piece to manage this process. Deductibles have increased. We've seen pretty much the whole world gone to percentage deductibles on the property side. We finally are seeing some lenders basically allow or relinquish their grip on the $1,000 deductible. You couldn't have over a $500 deductible in a lot of cases 10 years ago, 15 years ago on auto insurance. The reality of it is, since the average claim has jumped a ridiculous percentage, there's no such thing as a $800 fender bender anymore. You're lucky to get out for under $5,000. So if that deductible doesn't go up and there's not a little bit more shared cost, then obviously to pay for all that increase, there's going to be a rise in cost, a rise in price rate. And that's the part that's not discussed in these articles.
From a business perspective, it's hard to grasp 4 cents. To me, it's one of those, okay, but what's the catch kind of numbers. Most people have never heard that. Most people have no idea. While we know that within the industry, I can tell you 7 years ago, if you would have told me they only want 4 cent profit on the dollar, I would have snarked at that. I would have said, come on, we all know that they can't do what they do based on a 4% profit. Even being inside the industry and hearing that, sometimes it can even be a little bit difficult to comprehend how they can do what they do with a 4 cent profit. Now, of course, understanding investment profit and other things there, that makes it completely different. But our consumers don't know and don't care. All our clients see are these numbers that say 42, 51, 54% increase, or 24% last year, 22% increase this year. And they see how that affects them because they know they're going to be eating the French fries at the bottom of the bag because that's all they're going to be able to afford.
You know what I never see? I never see people writing articles complaining about the cost of vacations going up. Have you seen anything?
Absolutely, I have. I actually have read 2 or 3 articles recently about people are not vacationing nearly as much because of the prices going up. The number of people buying tickets to Disney actually went down this year. Like, vacations are actually being hit now. I don't know if it is primarily because COVID money has run out. I don't know if it is because the prices are just going up everywhere. Gas prices in an election year have not gone down the way they normally have. I made that announcement in an earlier podcast this year about things that we thought would happen this year. And I said, no matter what, gas prices would be going down, and they are not. So yeah, I am definitely hearing about people not vacationing. And just from a personal perspective, the cute boy and I have made some decisions on vacations that we were thinking about taking, and just with prices being what they are, made the decision not to.
I made a post to our agency network probably 6 or 8 months ago. I can't remember the exact date, but it was around observation. Think about what you observed personally, not always about what article's being written or article that's been read. Because who didn't get the memo about less vacationing? The people going to 30A, because they didn't get that memo.
That's the 1% of 1%.
It's not the 1% of 1%ers. It's crazy how much more crowded it is on the 30A area of the Emerald Coast. You know what's also crazy? Going from Texas to your wonderful Pensacola. Do you know what's always crowded? Mobile. We can't get through Mobile. It's nuts. We might as well just camp out on the side of the road and spend the night and then get up and go at 2 a.m. through the tunnel. The restaurants are still full, but yet we've written articles about auto insurance increases. So I understand I'm biased. Like, I'm not crazy. Like, I do understand that I have bias here. I'm an insurance industry guy. What I am a little bit worn out on is the punching bag piece. The restaurants, pricing's up, everything's up, but guess what's still full? The restaurants.
I can explain this one. It's human behavior. We want to go to restaurants. We want to go on vacation. We don't want to be forced to buy insurance. And so people feel like, since they are being forced to buy insurance and they see those rates going up, and A 20% increase in auto insurance on paper looks significantly bigger than a 20% increase at the Applebee's.
I understand and agree that insurance has always been a mandate of sorts. If it's framed that way, you have to buy auto insurance because it's the law, but you don't have to buy a brand new vehicle. You don't have to buy an $80,000 Ford F-250. This is part of the thing that I'm struggling with as we go through this defending our industry. What I observe just doesn't make sense. And I get the mandate. That's the one argument that is true, that is right. People don't want to have to buy stuff that they don't want to buy. And they feel like insurance is that way. But you don't have to buy the house either. Then you would have to buy the insurance. But you want to buy the house. So this is my story. I was the son of a banker. I was the insurance guy. What would happen in our little small town way back is our insurance agency was in the bank building as a separate entrance. We rented from the bank. And so my dad, who was the main loan officer banker of our town, people would come in and they were so excited to talk about this new boat. And they were going to get Mr. Rex to loan them the money for this new boat. And my dad was more than happy to loan them this money for this boat and make their dreams come true. And he would say, hey, my son's in the insurance business. Won't you give him a shot? And send him next door. And here comes Bubba. And by the time Bubba enters my office, he looks like this cartoonish bull with bull in the ring, kind of smoke coming out of his nose. Now, mind you, in my dad's office, the banker, where he's excited to borrow this money and pay interest to buy this wonderful boat that he's been hoping to buy his entire life for this ridiculous amount of money to pull behind his really expensive truck. He comes to my office and he's mad. He's absolutely agitated and mad. And when I tell him that his boat insurance, I kid you not, this is like 1990. So we put this in perspective. His policy was like $125 a year. That was it.
He didn't have the same boat we do.
And I thought he was going to come across the desk. He wanted to fight. Like, he was so mad. And he bought the policy. I sold him the policy. And I walk over to my dad's office. I'm like, what did you do to Bubba? And he said, I didn't do anything. I just loaned him some money. I was like, he was mad at me. He was absolutely mad at me, told me that I was a crook, told me that I wasn't worth anything, but he was going to buy this policy from me because he wanted to get that boat. And he had got his loan approved and they had to have insurance. So here. And he reluctantly handed me $125 to buy this boat. And so that is at the core part of our problem as an industry that we constantly have to work to overcome.
One of the things that I am very grateful to Mama Queen and Daddy Jim was when I was learning how to buy a vehicle. One of the things that they taught me was you call your insurance agent and you find out if you can afford the insurance. Not only do you have to figure out if you can afford to buy the car, you have to know whether or not you can afford the insurance. And when I bought my vehicle a few years ago, I called our office and I talked to my agent there in beautiful, scenic Huntington, Texas, and told her that I needed to get a quote on this vehicle that I was considering buying. And these were the two vehicles that I was looking at. And you could just tell she was in shock. And she was like, nobody ever does this before they buy the vehicle. They always do it after. My parents just instilled in me, if you can't afford the car, if you can't afford the insurance, it's something that you should find out first. And I wonder if this is an opportunity that we can educate our clients, find that out first, talk to us first. Is this a way that we can make this process better by teaching our clients that they can do that?
I think it's absolutely an opportunity. And I think it goes way beyond even our car insurance or even home insurance. I think this goes over to commercial as well. Don't sign that contract without sending it to us to review, because what you don't realize is that really big company that owns that sawmill that you're going to go agree to do this contracting welding work in, they have big lawyers, corporate attorneys writing contracts that benefit the large organization. They are not worried about you. They are worried about transferring that risk fully to you. We have had clients who got themselves in a pickle, who signed a contract and then found out that their insurance cost was going to go up drastically because of the wording in the agreement for them to do this work. This is across the board, homeowners, auto insurance, commercial insurance. We see dollars in terms of revenue we can make by doing this job and agreeing to sign this contract. We underbid the job because we didn't understand what the insurance costs would be. And now we're mad at insurance. What we should be mad about is the corporate attorney trying to transfer 100% of this multi-billion-dollar organization's risk to this small business owner. The more that we can position ourselves as educators, risk managers, the better we're going to be in the marketplace and the more successful our agencies are going to be. It's going to be different. We're then no longer policy pushers. We're risk managers. We're advisors. We are taking on a whole new perspective in the marketplace when we go down this path.
And y'all, just so you know, when we use the term risk manager, most consumers don't even know what that means.
Yeah, so you got to back up and explain what you're even talking about, and maybe not use risk manager, maybe use insurance advisor or something along those lines. The really good analogy that I always love, to confidently paint yourself into the same light as what society already respects. Do you have a CPA? Some of society doesn't. They use the H&R Block. They use the quick tax prep places. So you got to be careful with that one. Unless you're dealing with a business owner and they should have a CPA. Do you use a CPA? Do you have an attorney? The easier one is, do you have a doctor? Do you have someone somewhere that advises you on your health? If you get sick, where do you go? What do you do? Who do you trust? You go down through those scenarios and you say, look, your assets, the things you own or you're buying, remember that really expensive house you bought? You remember that X7 you wanted to buy? You remember that vehicle? You remember those kids you have that are about to be teenagers and you're going to give them this weapon and let them drive up and down the road? All of that stuff is counsel opportunity. It's an opportunity to advise, to counsel, and to say, look, this is just not an area where you want to go cheap. I think that's good layman's talk to people that they understand.
I'm going to leave us today with this quote from Dwayne "The Rock" Johnson. Success isn't always about greatness. It's about consistency. Consistent hard work gains success. Greatness will come.
Attitude's a choice. Make a great one.
Bye, y'all.
Ready to get the ball rolling with your independent agency? Learn more at IntegraAgent.com. That's IntegraAgent.com. Thank you for joining us on IA Forward. Make sure you never miss a show by clicking the subscribe button now, or learn more at IAForward.com.